What's going on, everyone? Hope you're excited. If you might notice, we've got quite a big bump in the portfolio here, $42,383, I should say. If you're not privy to this, I'm completely getting rid of my Stash Invest account, which I haven't actually shown on the channel. Valued around $8,000. I transferred over any relevant positions over $150 in value into this portfolio. So that's where you see this big change from the 37,000 I should say, towards this 42,000 line. So any of my larger positions I added on to my Robinhood portfolio. So we're going to go over the portfolio today, show you what we transferred over, as well as just what the portfolio is looking like as of this day. And we've had obviously a pretty rough time. One thing I have to preface this with, unfortunate side effect of that is the stocks I transferred over completely wiped out my cost basis for my existing companies, unfortunately. So our all-time gain looks a lot lesser than it once did, only at 48% here, but that's because it wipes out any of those percentage gains I actually had from my positions in the stocks I already owned. So definitely upsetting in that aspect because it makes it look like we're not necessarily performing as much, but I know personally, as far as dollar amount, we're still having a great time. Obviously, account's been around since July of 2017. We've had a rough month for sure, but let's go in and show you what that transfer looks like real quick. So if we get into this, I'll show you the assets we transferred over, and it's nothing massively crazy. So, but unfortunately, again, as mentioned, we're kind of in the boat where we can't necessarily see our cost basis on some of these, so somewhat upsetting. First off, we have Abbvie. It's in alphabetical, obviously, not necessarily by value here of transfer. Abbvie, just one share, nothing crazy at all. Didn't transfer any partial shares, so just keep that in mind. Simply whole shares. Apple here, 6 shares transferred over. Obviously, very nice to see that. Enjoy having more Apple in the portfolio for sure. We've got Carnival Cruise Lines at 28 shares. Carnival Cruise Lines, one that I had actually bought on Stash, part of the 2020 dip. I decided to invest in Carnival Cruise Lines. Hasn't actually recovered as much as I would have hoped, so one that I'm not sure on the future of the position, frankly, but we'll see what it looks like. 1 share of Costco, which is new to the portfolio, actually is on my M1 portfolio, not this one, but now it is technically 1 share. Ford Motor Company, 18 shares transferred over. Obviously, we have a pretty nice stake in Ford already in this portfolio, and we're going to obviously have 18 more shares now. Abbvie, a new ETF for the portfolio, which is the iShares Core S&P 500 ETF, 2 shares of that. 1 share of Meta Platforms or Facebook. SCHD here, 16 shares of SCHD. This was the biggest position that I transferred over, if you might be able to tell. 16 shares of SCHD. It's going to be a massive boost to the dividends in a quarter, which usually is my lowest dividend quarter. And we'll take a look at the dividends, obviously, as well, and what that kind of means for this. We also got the Vanguard Mega Cap ETF MGC, just 1 small share, nothing crazy. AMD, technically new to the portfolio, at 1 share as well. And Kohl's, we added 6 shares from the transfer. So that's where we look as far as what we transferred. But let's get into some of these stocks and show you what we're looking with here. So currently sitting at, look at that, so upsetting. No total return on Apple anymore. It's upsetting. But we have Apple obviously starting out. Look, 27.6 shares. I'm happy with that. But our cost basis prior to this transfer was around, I believe it was around $40 a share. So this was one of our highest performing, it was actually the highest performing position, I should say, in terms of percentage gain. Unfortunately now, not quite there. So you hate to see it, but again, 27 shares, 27.6 shares of Apple. I'm really happy about that. Meta Platforms, we've purchased more lately since the last time updating this, actually. Now sitting at 13.2 shares, but unfortunately, cost basis won't show. Was actually around 150, so we're still up on the position, even though we've seen an incredible dip of 36% over the last month. I've kind of been taking the opportunity and buying a little bit more. Microsoft, not when we transferred over, actually, so good. We still have a fantastic cost basis on this one at $94.45 a share. 4.39 shares isn't anything crazy, but a 200% return at $843 is quite beautiful. It's nice to see those numbers, and unfortunately we're not going to be able to for the other companies now, but hopefully Robinhood can fix that somewhere in the future, and I don't know if it's going to be able to because it's going to be something that they'll have to look back on. I don't know how that'll work for them, but AMD, no cost basis here, as mentioned, because we just obviously only transferred the one share over. One measly share, nothing too crazy. Cat's climbing over and some stuff over there. Disney, not one we transferred over, so we still have a cost basis. We love it. 102.07 on Disney. This one's been falling crazy. I haven't quite purchased yet. Most because we're still up pretty nicely, 7.29. A total return of 47% or $353. It's been nice for us, but it's kind of been a dog over the last year, all things considered. Carnival Cruise Lines, as I mentioned there, 28 shares. What do I think about Carnival Cruise Lines right now? I don't know. Last year, it's been pretty sucky, and obviously over the last 5 years, down 61%. Not something I like to look at, but don't know. It's in next to Disney solely because that's kind of my experiences tab. I don't really have necessarily a clustering of experiences in this, so it kind of makes that point. Now into more of the biopharma types. Medication, unfortunately, this was a magnificent win in cost basis too, but we unfortunately don't get to see that anymore. 5.8 shares here. We were up massively on Abbvie at around $70 a share. Unfortunately, not able to see that line, but it's okay. We'll survive. Gilead Sciences at $65.12 a share. We are down on this position actually. 7.5 shares, down 6.28 or $30. If you account for dividends, I'm technically up, but over the lifetime of this portfolio, because again, you see this $30 line, but it's one that if you look at the history, we've actually been making decent numbers in terms of the dividend since we've been holding it. So nothing crazy. Still one I plan on holding, all things considered. Then we get into our vehicle positions here with Ford. Another one where the cost basis was around $7 a share. Loved it. So we were up big on Ford. 88.3 shares of Ford now. I'll still take it because I'm very happy to see Ford and where it's at in the future, but it's all right. New York Community Bank, one of our only financials in this, core financials, I guess is a way to say it. We've had it since the dawn of the portfolio. Disclosures. Look, these are new charts for me. It includes the candlesticks, baby. Well, that's fun. I actually didn't know. I'll play around with that a little bit later. Nice feature there, Robinhood. Glad you added that. New York Community Bank, though, we're at a 29.2 shares at $10.77 a share, so we're up 8% or $26. Nice dividend payer, so we're actually up quite a bit more than that. But Robinhood doesn't show the gains from dividends, which is okay. Just solely the positions, which I'm okay with, though. Charles Schwab, which the cost basis is not accurate on this, in case you were curious. This is because we own TD Ameritrade, 4 shares of TD Ameritrade beforehand, which transferred over to Charles Schwab. So again, cost basis is messed up on yet another one. Not a good showing for us, huh? Makes us look like weak investors. We're not weak, folks. And you can see it with Target, baby. $96.68 per share, 6.8 shares, up 111%. Or $738. Love Target, plus a nice dividend gets paid every single quarter with Target. Love them. Great stock. One I'm considering buying a little more of right now, too. Then we have Costco. No cost basis, obviously, on Costco because we just added it, but just one measly share here. Nothing crazy. Only around 1% of the portfolio, but I'll be happy to own this one. Absolutely in the portfolio. Potentially one I might sell off and maybe even move that money over to M1 because I already have a Costco position over there, but we'll see what that looks like. Kohl's cost basis messed up on this one too. I hate it. Around $20 a share is what I pay. $23 a share, I believe. And we've got 23 shares. So we obviously had doubled the position plus nice dividends, but that's okay. We'll survive, folks. We'll survive. I love Kohl's. They've been doing great things, and obviously there are talks about buyouts. In my opinion, I think if Kohl's gets bought out, this is a company worth around $90 a share if you talk about actual fair value for the company. low ball offers have been in the 60 to 70 range. The company's worth so much more than that. When you talk about future prospects as well as just real estate as is, they're worth more than that. I mean, they're only accounting for what they are right now, not the future in those offers. So, hope the board can make some good offers, or really only accept good offers is what I'm hoping. Tapestry, untouched gem here. Thankfully, we have a cost basis $17.52, 23 shares, up 125% or $506, which I'm all for it. I love it. Tapestry's been a big winner for me and a very nice dividend payer, one I plan on holding as well. Now, look, here's an absolute stinker, folks. Stitch Fix. Oh, really one of my worst performing stocks. $19.63, 21 shares, down 34% or $143. Look, this was one that I can't lie to you, I missed the boat on. If you look at the last year chart, look at the last 5 years, this was a stock that it reached $100 at one point, and my cost basis was still right here, and I did not sell it. And I got greedy, and then it started falling, and I said it's going to bounce back up, and it bounced back up, and I didn't sell it again, and then it just has been a free fall. Look, folks, you win some, you lose some. Unfortunately, I had the right thesis with Stitch Fix. Unfortunately, it came crashing down with the whole market. Thanks to unfortunate situations. That's okay, though. Still going to hold it. I mean, I believe it's going to retain or really recover to the levels that it belongs to be at. It's trading at dirt cheap valuations at this point. Home Depot, beautiful win for us since the dawn of the portfolio as well. 163.66, just over one share just because dividend reinvestment. $190 or 111% in return. Really nice to see it. That does it for retail. I'm getting to some of the consumer staple type stocks here with Coca-Cola. Beautiful stock that just raised the dividend by a 5% level. It's fantastic. $45.44 a share, 7.6 shares. Actually up decently in terms of share price too with Coca-Cola, which is kind of wild because it's not one that moves all that much. Up 37% or $130 with a nice dividend too. Very nice. Very happy with Coca-Cola. It's a good rock to the portfolio. Then we have Starbucks. Also been a very great performer for us. $53.69 a share. 2 shares, only just over 2 I should say. Up $81 or 73%. But it's a nice win. We're okay with Starbucks. In a sea of red, we're okay with the performance of Starbucks. iRobot, another one I missed the boat on. Okay, $52.38 a share, 9 shares, up 12% so far, $60. But another one I missed the boat on because if you look over the last year, as of February of last year, this is a $130 stock, and again the cost basis was still at $52. So yes, I missed out on tripling the money there. I didn't sell it on time. But again, this company is trading at dirt cheap valuation, so I still like it. I'm sorry. I'm not selling that bad boy off because I like it. I think it'll recover over the next couple of years. And I think it'll be over $100 in the next couple of years. That's just kind of my thesis of it. Micron's been a beautiful one for us too. $45.27 a share. 10 shares on this one. Return right around 100% at $447. It's a big win with Micron. Very happy with Micron. It's been great. Cisco. Now this one I'm very proud of. Cisco is actually really doing great things right now, especially in the dividend segment. $39.38 a share, 5.5 shares, nothing crazy, but up $96 or 44%. And they pay a nice dividend every quarter. So Cisco's been a good, consistent player in the portfolio. Then we have Garmin. Tiny position, obviously, just one share of Garmin at $81.29, but we're up 40% or $34. It's one that I enjoy, one that I eventually will probably sell off, but the performance has been really good, and the company's doing great things, so I'm okay with holding that Garmin share for now, but eventually, just to kind of consolidate, I probably will sell that one out. Analog Devices, another chip company here, $81.15 a share since the dawn of the portfolio as well. Just the one share, but up $81 or 97%. It's been a big win since I've owned it over the last 3 years. Or really, it's near 5 years at this point. Good golly, 4.5 years. That's crazy stuff. Then we've got HP, one I recently bought more of actually, and we have a very good cost basis on $19.83, 15.8 shares, up 82% or $259, and this thing is still trading at a P ratio under 10. It's probably one of the cheapest stocks in the market right now for what they bring you, especially with a nice dividend. It's a ridiculous value play if you're into value stocks. Ridiculous. Activision Blizzard, one that actually has been most likely will pass regulatory inspection and antitrust approval, being bought out by Microsoft at $90 a share. So I will be holding on to this one until that and get my Microsoft shares that I deserve. Okay, only 2 shares here, $56.97. So I'm still up pretty nicely, 42% or $48. But look, I'm gonna wait until the. I think it's a great stock to hold when you know this share price is going to. It's automatically going to go to $90 a share at least, because that's the purchase point. It's $92, I think. So you know it's going to get to there because the deal's going to go through. Again, it's kind of free money at this point. It's just how long does it take? I don't know. But it is free money. So just throwing that one out there. Then we get into our real estate investment trust. Really excited about these because these are the core of our dividends. This portfolio is highly focused around dividends, okay? Annual income is going to increase nicely thanks to this transfer too. So 24.19 shares here at $56.05. Not an incredible return here, $256 at 18.9%. But this is a monthly dividend payer in realty income, and you can see that when you look through this dividends. Look at this, $5.94. Let's look at the history of this, just because that's what you want to see. You can see it increasing too, $5.94, $5.74, $5.52, $5.28. Every single month we're increasing this money. So it's really nice to see that for realty income. That's kind of the focus of these real estate investment trusts, and I'll show you a couple of those where they're kind of big players. No cost basis on the Orion Office REIT because this was actually supplement payment from O itself in a spinoff when it bought Variet. So 2 shares of this that I got in that spinoff. So for every 10 shares you own, you got 1 share here of Orion Office REIT. So just holding on to that one. I think it's plenty fine as is. Valuation's pretty cheap on it too. Then we have Iron Mountain. This has been a big winner for me. Very happy with that. $32.66 a share at $35.48 a share. Or sorry, 35.48 shares. What am I talking about? Up $367.31%. Has pulled back quite a bit in the last 3 months, I guess you could say, but it's been performing super well. And another one that I want to look at, if you look at the history of this, because this is a massive dividend payer for us, right? You can see how it increases from even January of 2021, $20.28 to where it's at now, $21.66 of just a year in the future. You're increasing that by over $1. And again, as we get larger dividends, it helps us purchase more shares. So that's that's kind of the snowball we're trying to build here. And over the next 15 years, hopefully we can continue that trend very well. OHI I've been buying pretty aggressively over the last really few months. $28.65 a share at 31.9 shares, or 39.1 I should say, down 0.5%, nothing crazy. But again, you can see kind of the efforts that I've been putting in with purchases when you look at the dividend amount, which actually is going to be going up even larger than this previous $24 amount. But again, you can see from November, pays quarterly, and you see how much more we invested in there. $17 paid in November, all the way up to $24, because we've been putting in a lot of money, and we put even more in since the ex-dividend date of this line here. As you see, it was only I guess it doesn't want to show me how many. That's fine. That's, we'll be all right. You dirty scoundrels. Yeah, that was at 36 shares is what that dividend was paid at, and obviously now we own 39 shares of OHI. So very nice to see. Then we have ABR, which is a massive position for me. Really happy for it. $10.56 a share. I've been buying this one also very heavily. It's been consistently beating the market over the last 10 years. beautiful one, plus a massive dividend yield over 7%. 98.4 shares, up $665 or 64%. And this is another one. Look, we're going to go down to the history again because I want to show you again. You can see all these purchases, but if you look at the dividends, the one coming up is going to be a massive one. I'll just tell you that right now. Last dividend paid $29. This one's going to be right around $31, I believe, or 33, I think, even 30, 32, somewhere in that range. When you look at what we've added since that previous point there, because you can see where we've purchased a lot of it. 50 or 30 here, 50 there, 50 there, 50 there, and then plus the dividend reinvestment that we got there too, and then another 50 there that was purchased prior to that, another 50 there. This is going to be a massive dividend coming up in March, so I hope you're excited about that and you follow us for our monthly dividend videos. Better follow us for that, okay? Apple Hospitality, nothing crazy here. $14, 23 cents per share, 65.8 shares, up $214 or 22%. Kind of crazy this is at its 52-week high, all things considered with how the market's been performing, or right near its 52-week high. Only pays a cent in dividends per month now. Used to pay 10 cents, and I do think they'll get to that point this year. I think they're going to up it to 5 cents. Just based off the financials, they can afford to up it to 5 cents. So I think they're going to do that this year. So we'll keep that in mind. So I hope you're excited about that. Then we have Southerly Hotels, very nice one that I picked up. A large quantity of 253 shares here at $2.17 a share. Overall return here up 12.4% or $68. One we've actually held not that long, and I do think they reinstate the dividend maybe later in this year, but I do think it's probably going to be a 2023 thing, unfortunately. I do think the share price is going to increase quite a bit when they do, as some of the previous investors get back in after they cut it. ARI, Apollo Commercial Real Estate, another great one for me. $11.72 a share at 85.5 shares, up 14.89% or $149. But again, this is a dividend story here where we're earning over 8% yield. Really, I think it's over a 9% yield on ARI, and it pays a beautiful dividend every single quarter, and we're going to continue to add to it. Then we have NRZ, beautiful stock as well, $10.11 a share, 47.16 shares, up only 4% or $19. But look, we're bringing up the dividends again, folks. They've been raising the dividend pretty aggressively, $10.29 most recently, and we've been buying quite a bit. And I do think they're going to raise the dividend yet again in just a couple months from now. So keep that in mind. Prospect Capital, following that, $6 a share even, which is pretty nice. I love seeing a nice cost basis like that. But 48.9 shares, really 49 shares. Monthly dividend payer here, 38% up or $113. Again, not really focused about the gain there, but it's a monthly 6-cent dividend payer. And it earns me quite a bit every month. I mean, I'll take $4 a month every single day and repurchase more shares because of that. So I'm really excited about that. Then we get into our ETFs, which I don't typically go into, but I will go into first here JEPI, because I want to mention this is also a massive dividend play, and it's one we've been adding a decent bit to. So if you look at the history, you can kind of see where the dividends have been increasing here. And it's one that fluctuates, but again, you can see where we started off in this position just April, earning $5 a share. Now right around the $9 range, we're earning a lot more. Very nice to see it. So one of those plays that I'm excited for the long haul. SCHD, which obviously we just added 16 shares into. Very excited for this one because, again, it's a massive dividend fund, yielding around 3%. I love it. Most recent dividend here was only $6. 29 cents, but you have to consider that that was off of 10 shares. Now we're sitting at 27 shares, so we're going to be nearly tripling, and we're up 170% in terms of what that dividend is, frankly. So really nice to see that. Following them, another monthly dividend ETF, SPHD. Then SPYG, SP 500 Growth Fund here. SPYD, another dividend paying fund. Dividend focus. MGC, as you saw over the transfer, and IVV, we saw that transfer over. Um, KBWD, monthly dividend payer here, another one of the snowball stocks, and KBWI. And I'll show you these snowballs with KBWI as well, because it's one that it does fluctuate every single month what they pay, but it's one that over the long term, again, you can see how we're kind of bolstering this from December of 2020. It's a monthly dividend payer. You see, I guess we can compare it to January of 2021, $4.21, and most recently $7.89. So we've been able to really increase that, and KBWI is more of the same exact story. So we've been able to increase that significantly. QYLD, another one of those stories. Look, I'm going to show you it one more time. Just kind of talking about the snowball here with QYLD, one we've been increasing quite a bit. Big fluctuation, but again, you see from the start here, kind of wild stuff. But we started this one, as you can see, in 2021, late 2021, but we've been adding to it quite a bit, and it's going to be really in the future developing into quite a nice position when you talk about the income we're able to generate. Then we have USOI, also focused on income generation at the moment. Pretty okay with that position. It's been earning pretty nice dividends, but we'll see what happens with oil. Potentially might bail out of that one shortly. So DIV, another dividend fund. DES, another small cap dividend fund. And then SNSR is a Internet of Things fund, I should say. Following that, we have NEO, which has fallen out of grace as of late. You can see a nasty year performance, 58% downward movement, but we're still up massively, okay? We are up off of our cost basis of $2.07. Very nice. Only 25 shares, sadly. Used to have 100. Wish I still had it. Sold the rest off at around $14. So, you know, kind of the levels we're testing right now. But we're up 1,000% or $522. So still my biggest percentage gain by far. So we'll take that as a win. Big time. When you're talking about, 3 years time, very happy about 1,000% gain. Then we get into kind of our stinkers. And these are our spec stocks, okay? These are stinkers. They've been hammered, unfortunately, because I bought most of these prior to what's been happening as of late. And spec stocks have been getting smashed. Penn, National Gaming, kind of more of a focus here in my perspective on the sports gambling portion of it. Only 4 shares, though, down 21.9% or $52. I think that's one that's going to be a great play here in the future. It's incredibly undervalued at the current level when you see what sports betting's been able to do and how it's going to continue to legalize in more and more states. Then we have Watt, big loser for us here. Energis, down 50%, off cost basis of $2.33, 111.29 shares, down $131. I mean, what can you say? It's a stinker, but it's a long haul play that I do think, if things work out with the company and my thesis is correct, I think they're going to be valued very highly in the future when they start selling their wireless charging technologies to the world. Bluetooth charging will be pretty significant. Plug Power, stinker here as well. Also has fallen out of grace in the last year, down 57%. I think these are deep buy levels, frankly, for Plug Power. I'm going to consider picking up more shares here. 8 shares at $25.86, down 15.7%, or $32. Nothing crazy, but again, this stock is dirt cheap compared to what we're talking about. The future being for it. So very excited for alternative energy future for them. And then we have last, but really it is least, New Age, formerly New Age Beverage, garbage company for me. 200 shares here, no cost basis, thankfully, because it's around $2 a share, unfortunately, on the cost basis. So we're down significantly, right around 70% on this one, and you can kind of see that over the last 5 years' performance. We picked up our shares kind of around this level of 2019, so hasn't been a good win for us. It was at one point a pretty nice win, and then we held on too long, unfortunately. But, I'm holding on to it. It's a small position, nothing crazy. So that's my portfolio. I hope you're excited. This is where the dividends stack up. Look, I have to mention it. If you don't follow us, every single month we do this dividend tracking sheet, and it's nice. We just had our largest dividend month in January of this year. Now February, so far not stacking up quite as high, but I do believe March is going to be a record month for us now, given SCHD as well as big payments into ABR. So hope you're excited. We're going to have our biggest month, maybe not this month, but probably next month. So keep an eye out for that. Hope you have a great day.